almost all in. Um, Welcome to Ahmedabad University. My name is Ravi Miglani. It's good to see a full house. What else would you expect with two former governors of the Reserve Bank of India? We obviously had to have a full house. Thank you for coming in. We have a treat in store for us over the next hour or so, listening to our two governors. It is not often that two former governors of the Reserve Bank are in the same room at the same time. Not very often, I hope. And not just two former governors of the RBI who were in the driving seat in the most turbulent and most dramatic period of the India's liberalization journey. So they have, I'm sure, a lot of stories to tell us on how they navigated the ship over those couple of decades. On a personal note, Dr. Rangarajan was my professor several decades ago at IIM Ahmedabad, and he remains a most revered teacher for me, as I'm sure he remains a revered teacher to most people in this audience, directly or indirectly. So it's very good that I can still continue to learn from him. I'm blessed that way. And the reforms that Dr. Rangarajan and Dr. Subbarao together started were, even if you are not a student of them, it has touched all our lives. It has touched the lives of 1.4 billion Indians. The India we live in today is to great extent due to the reform process that they were driving in the 1990s and the early 2000s. It's a cliche to say that our speakers don't need an introduction. Every event starts with saying that. But today, I don't think it's a cliche. It is a fact that these two speakers, these eminent governors of the RBI, do not need an introduction. But just in case, just to make sure that their contribution to public policy and governance and academia are put forward in front of all of us, we will do a short introduction of the two speakers. But I am not qualified to do that introduction. I am neither an economist, nor a banker, nor even an academic. So I will get someone who is much more learned, my learned colleague, Jimol Unni. Professor Jimol Unni is a professor of economics at Ahmedabad University. She is far more qualified to introduce our two eminent speakers. Jimol.
Good evening, everyone. And thank you all for coming here in such large numbers, though of course I'm sure you would, given that we have these two very eminent speakers. I don't know how qualified I am, as Ravi is trying to say. I'm an economist, yes, but not a RBI person and not a banker. I'm an academic, yes. So as Ravi just said, Dr. Rangarajan and Dr. Subbarao don't really need any introduction. But for an audience, and I hope that we have a lot of undergraduate students here too. Dr. C Rangarajan was a member of Parliament and the 19th Governor of the Reserve Bank of India during 1992 to 1997. Before that, he was the Deputy Governor of the Reserve Bank of India from 1982 to 1991. He was the Chairman of the Prime Minister's Economic Advisory Council, and at the time of the earlier government. The Government of India rewarded him the second highest civilian award, the Padma Vibhushan, in 2002. He is currently the chairman of the Madras School of Economics and distinguished professor at Ahmedabad University. He, of course, chairs many institutions, including the Madras School of Economics. He graduated from Loyola College of Madras University in the commerce stream. And then he later received his PhD in economics from the University of Pennsylvania in 1964. His thesis was titled Variability of Demand Deposits. Very importantly for us in Ahmedabad, he taught at the Indian Institute of Management, Ahmedabad, where Ravi was telling you he was a student of Dr. Rangarajan. And this was before he was inducted into the RBI. He's been an expert on expert committees of the Government of India on almost every topic that you could think about. That is how varied is his knowledge And some of the committees that I am familiar with is the Committee on Financial Inclusion, the Committee on Poverty Estimation, and also on disinvestment. The Rangarajan Committee report on poverty is the most well-known, or maybe it is the most well-known to me as I am a development economist, well-read and critiqued as well. Equally eminent, we have here on stage Dr. D Subbarao, who served as the governor of the RBI, the Reserve Bank of India, for 5 years between 2008 and 2013. And prior to that, he was a finance secretary to the Government of India and secretary to the Prime Minister's Economic Advisory Council. Dr. Subbarao joined the Indian Administrative Service in 1972, topping the highly competitive civil services entry examination in that year. He was just telling me that he took a week training in Institute of Rural Management, where I was earlier. I'm sure he didn't need that. As a career civil servant, he worked in various positions in the state government of Andhra Pradesh and in the federal government of India. He was a lead economist in the World Bank from 1999 to 2004. Dr. Subbarao got his master's in physics from the Indian Institute of Technology, Kanpur, and Master of Economics from Ohio State University. And then he subsequently studied public finance as a Humphrey Fellow at MIT. He got his PhD in economics from Andhra University. And after stepping down as the governor RBI, Subbarao was a distinguished visiting fellow at National University of Singapore and most recently at the University of Pennsylvania in 1920. It is indeed an extraordinary day for us, where we have this extraordinary couple of speakers who have been at the head of the Central Bank of India during relatively turbulent times in the economic trajectory of India. Dr. Rangarajan served as the governor of the Reserve Bank of India during the period December 1992 to December 1997, when India adopted the economic reforms and was opening up the economy. We at this university have heard a lot of stories of that period, inside stories. We would invite him to our classes. He would talk to our undergraduate students, our masters in economics students, of what went on in the RBI and how India survived the balance of payments crisis during that time. I'm sure you're going to hear a little bit of that as well. Dr. D Subbarao served as the governor of the Reserve Bank, as I said, between 2008 and 2013. And this was just after India had seen a period of very high growth, which some of us economists term the dream run between 2002 and 2008. Within a few weeks of joining the Reserve Bank of India, the scenario changed drastically, and the country was hit by the international financial crisis. In the later part of his tenure, again, he had to fight high rates of inflation that India was facing during 2009 to 2011. Interestingly, both these former governors of the RBI have written books about their views on the turbulent times that they saw at that time. Dr. Rangarajan, we will listen to today, and he speaks about his new book, Forks in the Road, My Days at the RBI and Beyond. Dr. Subbarao's book, Who Moved My Interest Rate, very interesting title, chronicles his experience in leading the Reserve Bank of India through those 5 turbulent years. The book is best known for the way he explains the policy dilemmas and challenges facing the Indian economy and the Central Bank of India in a globalized world at that time. We hope to hear him speak about his book and the experiences on this platform someday as well. Thank you very much, and I will leave this to you, Dr.
Thank you. Thank you, Jimal. That was far more erudite than I could have ever managed. Thank you. So you are not here to listen to me or even to Professor Unni. You are here to listen to these two eminent governors. So over to you, Subbarao sir.
Thank you. Good evening, and it's my pleasure and privilege to be part of this book event. When I first read your book, sir, the first impression I had was that even a trained librarian will find it difficult to classify that. It's part memoir, part economics textbook, part economic history. As somebody said, it's the economic biography of the last 4 decades of India. So many congratulations, sir, for this excellent book. as you heard from Professor Unni, so you held many positions. You were Deputy Governor and Governor of RBI, member of the Planning Commission, member of Parliament, chairman of the Finance Commission, chairman of the Economic Advisory Council. But you will be most remembered, I believe, for your role in the economic reforms of 1991. And those reforms were kick-started by the devaluation of the rupee that was conceptualized, initiated, and managed by you. So can you tell us, can you take us back to that period, give us a flavor of that devaluation, how that was a breakaway decision, how that was the first reform that set off the reform process, and why that was significant?
Thank you, Subba. I do not know whether you are getting tired of me, because it's the third time that I am speaking in the last 3 days. I must also say that I'm very happy that Subbarao is here, and he's initiating the questions. But I must also say that he worked with me in the Economic Advisory Council, and later on when he was the Finance Secretary and the Governor, we interacted because I was still part of the government.
He was my teacher, like he was for many of you.
Well, the point is that he's asking me questions today, and therefore, Dr. Subbarao has become Professor Subbarao today. But I welcome that, because I know how sharp he is, and he is highly intellectually oriented. And I interacted with him also, even though somewhat distantly, even when I was governor of Andhra Pradesh. He was the finance secretary of the Andhra Pradesh government at that time. Governors don't directly interact with the secretaries of the government, but we had opportunities of doing it. The periods that through which we had to steer the Reserve Bank, both by me and Subbarao, were exciting in many ways. Mine was a period when India had faced an acute economic crisis, balance of payments crisis. We need to come out of it and then move on to a new track. And when the economy was getting more or less stabilized, Subbarao took over as governor, and at that time, from the day one, I think, he had to really face a real problem. The problem was not triggered by India, but the problem was triggered elsewhere. But its impact was felt by every country, including India, and he had to handle it. And towards the end of his 5-year tenure, he also faced one of the acute problems that all governors face, namely this conflict between growth and price stability. And the usual stand that central banks take and the usual stand governments take come into conflict. And in his situation, in his time, it took sometimes an ugly turn, but he had to handle it. He had to really show where the central bank of the country stands as regards the position regarding price stability and growth. To come back to the question that Subba raised, the new government under Narasimha Rao took over towards the end of June 1991. And almost the first major decision that they had to take was on devaluation of the rupee. Because it's within a week or 10 days of taking over, we had to announce a major decision. By that time, the balance of payment situation had deteriorated very much. The current account deficit in 1990-91 was 3% of GDP. In fact, more than the current account deficit, the real problem was how to finance that deficit. There were no takers for India. I mean, I think nobody was willing to give us money. I think that was really the problem. We had an acute stress when we were not able to roll over short-term credit and medium-term credit. And one of the problems which India had at that time was a fairly large number of short-term credit and which had to be turned over. I mean, I think what we call acceptance credit for financing the purchase of crude oil, and we could not even turn over. So when we were going around trying to find sources of financing, the question really was that what action do we take? When you look at the set of measures that we took in the middle of 1991, they can be broadly classified into two groups. One were aimed at stability, and the others were aimed at structural reform. Stability is required because reforms cannot be introduced unless the system came to some sort of, not equilibrium, but some sort of rest. However, the stability measures by themselves are not adequate because the structural reform measures were intended so that we do not get back to a situation that we had faced in 1990. That is, it is in that sense that the devaluation decision was important. And actually, we decided to reduce the value of the rupee in terms of the dollar by about 17% at that time. It is it's a substantial reduction. That is because we had a high current account deficit and we had to show to the world that we are determined to tackle the problem, and therefore the devaluation became absolutely essential. There was some discussion about the magnitude of devaluation, but everybody agreed that devaluation was necessary. And we took the decision, and there are many twists and turns in that decision to devalue the rupee. We did what we call a two-step devaluation. And there is another aspect of devaluation which many people have somewhat ignored, and that is, this is the first time the devaluation of the rupee was announced not by the government but by the Reserve Bank of India. Usually, devaluation is a quasi-political decision, and therefore the announcement of devaluation is always made by the government. But on this occasion, we decided that the Reserve Bank of India, in the course of its daily morning activity of changing the value of the rupee, will do this. It turned out to be a right decision because of many other things that happened later. But it is important to note that the process and the procedure for devaluation was entirely that of the Reserve Bank of India. Why two-stage? Many people ask the question. We wanted to test the waters in one sense. The other was essentially that since we were announcing it as part of the daily activity, a very sharp one on one day might not be appropriate. Therefore, we wanted to do it in two. But even then, even announcing, let's say, out of 17, 8% devaluation on one day through a morning activity is too much. I think the market was completely shaken on that day. And they did not believe, and they kept on asking, is that correct? Is that number correct? And we had to say, yes, that number is correct. That is what we are doing. So that is the nature of the devaluation that we did. Therefore, I would say that the first strong signal that the new government had to give came through the decision to devalue. And it was entrusted to the Reserve Bank of India. And it fell to my lot to announce that on the first day. And then went on to do it on July 3rd again.
So thank you, sir. Thank you for taking us back to that period. In fact, I was in the government at that time. Dr. Rangarajan just said that the big problem was not the size of the current account deficit, but how to finance it. I used to be a joint secretary in Delhi, and what we actually used to do was borrow in Tokyo in the morning, pay in New York, and borrow in New York in the evening and pay in Tokyo. That's how hand-to-mouth we were. But going back to that period, sir, I want to ask you this, that there are two models of leadership I hear about. One is that leaders are absolutely sure, they have the courage of conviction, they know what they're doing, they are certain about the outcomes. The other is that even the most famous leaders, most well-known leaders, have some element of self-doubt. In your decision about devaluation, that hop, skip, and jump as you described it, was there any element of self-doubt, some apprehension that this might backfire?
Well, the hop, skip, and jump was the code word that I had used. I mean, at that time. There was one thing is that what will be the impact of devaluation was one question on which there are always controversies and so on. But at that particular point in time, as I mentioned already, we had to send out a signal that we are serious, we are going to put the situation bring the situation under control, and therefore we had to announce a large level of devaluation. The other was that whether politically it will be acceptable or not was a big question. Narasimha Rao had come, even his coming was not considered to be a very stable one.
Right.
And the politically how it will be taken was the issue. In fact, I remember, I think Jairam Ramesh in his book on devaluation says that there were many others at that time who were saying, well, we can go to IMF and get the financing without having to do devaluation. I think that is a total mistake, but I don't think that would have happened. But anyway, some people were saying it. And because of the unstable political situation that prevailed at that time, Narasimha Rao also became a little concerned after the first dose of devaluation was announced. Actually, I was not aware of it. It was not communicated to me. Some people don't believe it, but I will leave it at that. But it was not communicated. And he talked to Manmohan Singh, who was the finance minister, and said, can we stop the second installment? Then the reaction of Dr. Manmohan Singh was that it can be done because we have never announced that we are going to devalue the rupee. Therefore, if he doesn't do anything on the third day or fourth day, it doesn't make any, it can be done. But he had his own doubt. He did not want to do it. As I understand, he told Narasimha Rao, I will get in touch with Rangarajan and then see what can be done. And I was incognito. I was not available. Therefore, he continued to tell the Prime Minister that I am getting in touch with me. And finally, he got in touch with me at 9:30 on July 3rd. And he asked me, what is the situation? I tell, I have jumped. That was the end of the matter, in the sense that the decision was originally taken and I had implemented. Of course, Narasimha Rao was not intellectually convinced that we should not do the second one. Intellectually, he was convinced that it should be done. But he was only perturbed by some of the political noises that were being made at that time. And therefore decided or told the finance minister whether we can stop doing that. But I tell you one thing. If we had stopped doing the second one, it would have sent the wrong signal to the world. And all our efforts to get out of the tight situation would have become impossible. Therefore, I think it was, in retrospect, it was good that the decision to devalue in 2 stages was given to Reserve Bank. And
so
we were held responsible. We were to do it, and somehow it went through.
A combination of intellectual conviction and political doubt.
Yeah. So we did that. There is also some people who raised some doubts, including Mr. Chidambaram, that when I said I have jumped, whether I had jumped.
He was then Commerce Minister?
So he was the Commerce Minister.
Commerce Minister.
So, but those doubts may remain. But I think I tell you that it was implemented. Yes.
So staying on with reforms for a little longer, because many of these young students are post-reform children. They don't know the pre-reform period. You know, it's very difficult for you people to imagine what life was before the economic reforms of 1991. The 1991 reforms were a moment not only in Indian history, but even in world history, when a large populist democracy with a federal setup embarked on such far-reaching reforms. It was never done anywhere in the world, unprecedented. Just to give you a flavor of the life before 1991, we went abroad. We got a paltry sum of $20. We went to a shop. We had a choice of 3 soaps and 2 shampoos. If we had to get a gas connection or a telephone line, we had to apply and wait for years and then get after some MLA or some senior officer. Color TVs, only the rich people could import them because they had the money, others did not have them. And the government was so involved in production that they used to make bread. In fact, those of us who went to Delhi, we used to proudly say that we ate modern bread because modern bread was made by the government. So that was life before 1991, and it changed completely after that. So can you tell us, sir, what was the big differences in terms of economic management, pre-91 and post-91?
I think you have written and I have written about what we call the 3 breaks with the past. And in 3 important ways, the way we looked at economic management underwent change. First of all, as you mentioned, it was a system full of permits, controls, and limits. In the economic field, what to produce, where to produce, even how to produce, were all determined by the government. And it is this which was felt at one time as being ideal, because the whole rationale behind economic planning, which we started with the first 5-year plan in 1951, was essentially that in a country where resources are scant or resources are limited, that the most efficient way of allocating resources will be through planning. I mean, the example was the Soviet Union, and that is what was being done. But in actual life or in practice, it turned out to be very, very, very different. as you mentioned about the kind of scarcities that you will enter into because of the
Controls.
the regulations and so on, was so many. In fact, when I first went to the United States, and I was then a student, and then when somebody came and said that at the apartment, do you want to have a phone? I said yes, but I was remembering India. So I said, when will it come? He says. Then he said, we'll fix it in the afternoon. So that was the big difference between what was happening in certain parts of the country and certain parts of the world and India. I'm not saying that we have not accomplished anything between 1947 and 1991. I think that would be very wrong to say that. I think we really had no knowledge of how to accelerate growth in 1951. Not only we, but many other countries in the world. But by end of 1970s or 1980s, I think at least a decade earlier we could have done it. But anyway, come back to it. The first break was to do away with all these controls and permits. And the restrictions on entry and growth were also removed. Because the most important thing that happened in the planning period was restriction to entry. I mean, if you want to set up a plant which is above a particular size, then you have to get the permission. And if you wanted to expand your factory, even that required a permission. So restrictions on entry and growth were removed, permits and controls were removed. That is the first break. Now the question is, applying this principle to the various fields, whether it is trade or whether it is industrial licensing or whether it is to that, is the next phase. But philosophically, the first thing was to break with the permits and controls. Second was the redefinition of the role of the state. I mean, the state dominance was perfect, and therefore anything in terms of investment beyond a particular size, above a particular size, was the role of the state and so on. Therefore, there was a redefinition of the role of the state. And some areas which were exclusively allotted to the state were opened up for the first time, like aviation, even steel, for example. All of that were opened up. So that was the second one. And the third one is in the area of foreign trade, to move away from import substitution policy, to embrace global trade and willing to compete in the international system. In fact, he asked about devaluation and other things. The whole thing that happened at that particular time was we not only devalued the currency, but also went beyond that and altered the foreign trade regime. I mean, I think that is more important. I write in my book, to devalue the rupee was a bold decision. But the bolder decision was open up the foreign trade and really willing to compete in the international scene. I think that would be the third one. So to summarize, these are the three major breaks. Yes. And as I said, that application of this principle to every field resulted in a number of other decisions.
In fact, I want the students to understand that these are not just technical issues, but political economy issues. Because if you just want to open up foreign trade, there's so many vested interests who militate against it. So for the government to fight those vested interests and break from the past was a very momentous decision. So, but I want to move away from that 1991 reforms to another interesting issue, which is the autonomy of the central bank, Reserve Bank of India in our country. It's of course a very fashionable issue, very glamorous issue, in fact a sexy issue in some sense. And I'm sure that some of the students might be having classes or sessions on the autonomy of the central bank. But even before it became fashionable to talk about the autonomy of the central bank, you pioneered that. And you devote an entire chapter in your book to the autonomy of the central bank. And I know this, some of you might recognize this, that the autonomy of the Reserve Bank of India in India started with the termination of the automatic monetization of the deficit. You know, in those days, governments used to make the budget, say this is our revenue, this is our expenditure, this is the excess of expenditure over revenue, this is the deficit. So it was understood that the RBI will run the printing press and give the money to the government. In fact, as soon as the budget number came, the Nasik printing press would start printing money in order to prepare for that. Dr. Rangarajan stopped that. And that was a very momentous reform. Momentous not only for the economic management of the country, but momentous in terms of establishing the autonomy of the central bank. So can you tell us, sir, take us back to that, pre-treasury bills, pre-ad hoc monetization and post, and in what sense was it a very significant thing for the autonomy of the central bank and for the economic management of the country?
Thank you for asking that question. I think that's one of the things which I will cherish very much, because I think that's something on which I had been writing even earlier
Yes.
than I became a governor. And the issue is really automatic monetization of the fiscal deficit. The Reserve Bank of India and the government entered into an agreement. Under that agreement, when the cash balance of the government of India fell below a particular level, automatically these treasury bills were issued, and in substitution for it, the cash balances were supplied to the government, which essentially means that the government can continue to spend any amount and automatically it will be monetized. And there was a situation at which neither the governor of the central bank nor the finance secretary knew how much was being monetized, actually. But this is a bad system, and this had to be brought to an end. This issue had been raised earlier also, when H.V.R. Iyengar was governor, and T.T. Krishnamachari was a finance minister. And T.T. Krishnamachari just replied to Iyengar saying that, yes, it's good that you brought to my attention this thing, but we will take care. What he meant by we will take care doesn't know. And that letter of Krishnamachari, like many other letters that Krishnamachari had written, was totally in a very arrogant tone. And the point is really, government knows best. I think that was the philosophy at that time. And so we, to cut the story short, I mean, I think the point is that we had to bring to an end this practice. So I mentioned to Dr. Manmohan Singh, who was the finance minister, and we had a finance minister who was receptive to the idea, and he had been governor earlier, and therefore he said, yes, this is bad in principle. It is not as if that once this system comes to an end, the Reserve Bank will not provide liquidity to the government. That is not true, and that is not true even today.
Yes.
I think the monetization of the deficit is happening, but it will be a deliberate act. In the other one, it was almost automatic. That is a difference. And we spoke to him, and it took us almost 3 years to do it. It is not done immediately. What we put first was a limit on the issue of our treasury bills. And slowly, after 2-3 years, we said no issue of ad treasury bills, and the government of India will get only what you might call loans and
Ways and
means advance from the Reserve Bank. So that is what it is. So in some sense, this was an important decision. But let me also say that autonomy of the central bank has many dimensions. After all, the central bank is today not only a monetary authority, but also a manager of the foreign exchange system. He's also the regulator of the banking system. So autonomy, when you look at it, is multidimensional that way. I mean, the interference of the government can come in any one of those areas, and I think you must have also experienced in your own way how the government must be interfering with in many matters. All that one can say is it is not that the government is not the final authority. After all, the government has the major responsibility to run the economy, and monetary policy is one aspect of it. And therefore, they do have a final say. But the point really is that once the autonomy in certain areas has been given to the central bank, then the government should not go and interfere there. That even in the inflation targeting regime, for example, the government had a say in saying to what level inflation can go up, 4% plus or minus 2%. Is a mandate that was decided by the government. I mean, it was passed. I mean, it is the amendment of the RBI Act which gave it. Once that mandate has been given, my point is that it should not be interfered with. And I think the central bank of the country must have the operational freedom. And there is a phrase in it usually used in the literature. And operational independence that means given to the Reserve Bank. So therefore the termination of the system of the Aadhaar treasury bills was the beginning of this whole arrangement, to the beginning of looking at the arrangement between the RBI and the government.
The autonomy of the central bank of RBI became a contentious issue, and I think many students relate to that. 3 years ago, when Dr. Urjit Patel resigned as governor of the RBI, it was on speculation is that it was on the issue of the autonomy of the central bank. And you refer to that obliquely in your book, sir, when you say that the attempt to put pressure on the governor through the board was also an unwise development. I presume you were referring to that episode, but I don't know. Can you put that in the context of the autonomy of the RBI?
No, as I was saying, that autonomy issue does not arise only with respect to monetary policy and monetary management. That is key. That is important. After all, the importance of RBI arises from the fact that it is the monetary authority, and therefore autonomy there is extremely important. But that is not the only area. I mean, I think these, and if what I refer to in the book on this is that I am not privy to many things that happen between the governor and the government on that, on the very issues that will happen. But all that I know is what I read in the newspapers, nothing more than that. So I was only saying that if the governor and the finance minister or the government do differ to the two, then the way to resolve it is between them and not use the board of the Reserve Bank of India to put pressure on the governor. I think the government trying to talk to the individual members of the board on trying to influence the decision is not a good idea at all. I mean, that's what I was referring to, the pressure being put through the board.
But a more recent issue, and all of you will recall, 2 weeks ago, the Supreme Court issued a decision saying that the demonetization was appropriate. And there's been a lot of commentary about whether the Supreme Court actually sanctified demonetization or only sanctified the procedure, was just saying that the appropriate procedure was followed. So in the context of the autonomy of the Reserve Bank that we've been talking about, Can you comment on that decision, sir?
I don't know whether it is wise to comment on that decision. But let me say this.
Wise because of the Supreme Court or because of the government, sir?
The point is that on that issue of demonetization, there are two aspects. One is whether whether it is legal, in the sense whether the procedures required have been followed, and the application of the mind, as they keep on saying, has happened, and therefore whether it is lawful in that sense of the term. The other is a totally independent issue, namely whether it was wise to have introduced a demonetization, and whether it achieved the objectives, and whether it could have been done better through some other mechanism, and so on. Therefore, the Supreme Court actually decided only on the first issue, the legality of the action. And they actually had access to all the papers, the correspondence between the RBI and the government. And they came to the conclusion, at least the majority opinion came to the conclusion, that it was lawful, in the sense that all the procedures required have been followed. And there was a recommendation from the RBI to the government to go through this process of demonetization. It's very difficult to say anything on that, because they are the best judges, so to say, on the matter, because we do not have access to that information. Therefore, please note this important difference. Previously, whenever demonetization was introduced, it was never done through this mechanism. The demonetization introduced by Morarji Desai, I think 1977, was through a legislation, because an ordinance was issued, and the ordinance was later approved by the Parliament. So the minority opinion really raises that issue, whether an act as important as this can simply be done by a procedure under an act, or whether a separate legislation was required. But previously, it was through a legislation the demonetization was done. But perhaps this time there were some doubts about the ordinance being approved by the Parliament, particularly the upper house, and therefore they picked up one section in the Reserve Bank of India Act. I do not know whether when you were governor you looked at that section.
Section 7, sir?
The section that they have made use of.
For demonetization, yes. No, I have not looked at that.
Yeah.
Yeah.
That's it. I mean, I can tell you that most of the people would not have looked at that section.
Right.
I mean, I think that section was
Unused.
An unused and obscure section, and it was essentially meant for taking away the legal tender character of certain series of the currencies issued. It was never meant to be, I can't say it was never meant to be, but we can say that it was not supposed to be used for doing a whole set of series of notes belonging to a particular denomination to be taken away. But anyway, the Supreme Court has said that that section does apply not only to a single series, but also to whole set of series. So they are the final authority as far as the law is concerned. So that's what has happened. So I think on the autonomy of the Reserve Bank, the only question really is that whether the procedures are followed, and whether the the Reserve Bank was given the time to express an opinion. According to the Supreme Court, it was. And therefore, I think we will have to leave it at that. The other issue of whether it was wise to have done on all of that is a much bigger issue. And I think that on which many people have different opinions. But perhaps one of the things is really the management of the process. As you all know that demonetization essentially means substituting old currency by new currency. And when more than 70% of the value of the currency was being demonetized, the extent of new currency that was required to replace the old currency that is being, whose legal tender character is being taken away is is enormous. And that would have required the printing press to have been put to maximum use for a long time. I mean, I think that all that should have been done. Then if that had been done, probably there would not have been any negative effect. Questions may still arise about the positive effect. But now there are a negative effect because there was not adequate currency and people were really put to difficulties, particularly daily wage earners, vendors, and so on and so forth.
So taking off from this discussion on the autonomy of the central bank, you said while elaborating that the RBI has operational independence. It doesn't have mandate independence, which is determined by the government, but it has operational independence. But there's a view that even with this operational independence, the RBI is not totally independent because there is something called fiscal dominance of monetary policy. That is, the government decides how much it's going to borrow. It decides the fiscal policy. It's very much within its right to decide that. But once the government determines that it's going to borrow so much, the RBI's monetary policy becomes subservient to that fiscal policy. In that sense, even though the RBI is autonomous, it cannot exercise its autonomy. And in fact, during peak COVID, some of you might recall that there was pressure on the government to directly monetize the deficit, to print the money and give it to the government. So do you think that that was an occasion when the autonomy of the central bank was tested, and was there, in your view, a case for direct monetization during COVID?
Yeah, I mean, after all, we moved away in some sense by terminating the issue of adoption bills of direct monetization. And but I will come back. But I think this distinction between direct monetization and indirect monetization, I don't really
don't agree with that.
I don't consider that important. But I believe even within that, indirect monetization is preferable to direct monetization.
Yes.
But in the ultimate effect, both lead to
same impact,
same results. I mean, I think this is the point really is fiscal dominance comes when the government decides to borrow beyond a limit. We can define what that limit is. I mean, there are ways of doing it beyond a limit. Then what happens? Then the central bank of the country, what does it do if the government finally comes to the market and floats a loan beyond the capacity of the market to absorb? The central bank might have to agree to it, and then in which case it is really monetization of the public debt. To what extent can this happen? So the point is that you may recall, I do not know, by the time you became governor, this practice might have been given up. In December of every year, the governor will write a letter to the government saying that in our view, that the public borrowing, that is the central government's borrowing, should not exceed this level because this will mean that it will have to be financed by the central bank, And therefore, we do not think that in the light of the income growth, GDP growth and all that, we would advise the government to limit the public borrowing to such and such level. I don't know whether...
No, sir, that was not there.
I think
gone by then.
That system, I think, was given up later.
FRBM had come. FRBM had come, so there was some limit placed by that.
So, yes, by the time you came, FRBM had already
Right.
come. Yeah, the point is that this was a way of telling the government, this is moral suasion of some sort, to say that don't borrow beyond this limit, because then we will have to support. Our support essentially means monetization of the public debt, the increase in money supply, and so on. In the 80s, the government would thank the governor for advice and say that we will do our best to honor your advice, but you know that we have our own compulsions. This is a usual sentence written. We have our own compulsions. We are also answerable, and so on and so forth. So this process had to stop at some particular time. The FRBM Act came, and it said, but the FRBM Act lacked teeth, because if they exceeded the limit set in the FRBM Act, nothing could be done. They can only say something in the parliament, because the parliament also agrees to the increased expenditures, because it is approved by the parliament. And therefore, automatically, the public borrowing naturally increases. Therefore, the point really is that the government also must be convinced of the need to contain public borrowing in the larger interest of price stability and so on. Therefore, take for example the COVID-19 period that you talked about. At that time, almost everybody advised that government expenditure should increase. I have not seen any economist or anybody saying that government expenditure should not be increased. Everybody said the answer to the problem is increase government expenditure. And this was a period in which government revenues were falling because there was no increase in income. And essentially it landed on the lap of the central bank. See that, I mean, UK, USA, India, all the countries followed the same thing. Who is the worst offender? The worst offender is the United States, who gave a check to every household. And the net result is, 2 years later, you have a situation in which almost the United States experiencing 8% inflation, unheard of. And UK experiencing, and India also experiencing a higher level of inflation. What could the central bank done at that time? I think the central bank would have drawn attention to the fact that while this may be necessary, the end result can be that a year later something could happen in which the price level could go up. I wrote an article entitled "Between the Devil and the Deep Sea." This was the title of the article that I wrote, in which I clearly indicated at that time that yes, increase in government expenditure may be called for. This is the standard Keynesian prescription. But if you do that, you will end up also with inflation. I had written it. Paul Krugman only said, I forgot about inflation. So I did write in very clear terms about it. But the point really is that what is direct and indirect monetization? Direct monetization is directly supplying the
money to the government.
Print the notes and give it to the government. Indirect monetization is the central bank supplies liquidity to the banks. Banks in turn contribute to the loans floated by the government. The indirect monetization is preferable to direct monetization because in direct monetization there is no intervention of the market. And therefore the rate of interest on government bond may be artificially fixed.
Right.
But whereas if you do indirect monetization, there is an intervention of the market, and therefore at least the rate of interest will not be artificial. That is that big difference, and therefore direct monetization is not preferable. So we had, you remember at that time, lot of government bonds with us in the Reserve Bank. But all of them had carried a rate of interest of 3.5%. You cannot sell that bond anywhere else. You have to carry it on yourself. I mean, that's it. And that is why in the 1990s, when we introduced changes and all that, and when a lot of foreign money came into the country, we could not neutralize it by open market operation.
Right.
Because the government paper that we had was at a rate of interest which was so low that if you sold it, we would have capital loss. I think
Yes.
the Reserve Bank of India will also, for the first time, show a loss. I mean, I think that would have happened. So that's it. But come back to your point. I think the issue really is that if the fiscal dominance becomes really strong, then monetary policy becomes really, what do you call, a byproduct or something like that. But the question is really to understand the relationship between the central bank and the government. And I think the central bank should stand up. I mean, I think there is no question of buckling down. I mean, I think the central bank should stand up and tell the government, if you want really, tell us. You know, there is Section 7, isn't it right? Section 7 of the Reserve Bank of India Act, under which the government can instruct or can give a direction to the Reserve Bank of India to act in a particular way. But do you know, since 1935, that section has never been used. It is not as if that the government did not want the Reserve Bank of India to do this or that. It's all oral, that's all. There is never a written instruction from the government of India to the Reserve Bank saying, you do this. I think under the Act, if they say that, they will have to put it in the...
Consult the governor first and then...
Tell the parliament. I think, anyway, the point really is valid, what Subbarao is saying. Namely, ultimately, if the government decides to borrow a lot more, then the question is really what the Reserve Bank of India does. But I think putting up a fight is important. Is there. I mean, I think that we should not really give up.
So you will be remembered for many things. Among those will be that you will be remembered as the most consistent champion of fiscal responsibility. I remember Dr. Rangarajan and I, when we were in the Economic Advisory Council, when he was chairman, I was secretary, we wrote a paper called The Importance of Being Earnest about Fiscal Responsibility. And that paper, if you read it today, it is still relevant. So in the context of all that you said just now, sir, and the budget is going to be out on the 1st of February in a few weeks from now, what would be your advice to the finance minister on the budget?
Well, I'm an outsider now, therefore I can...
So all of us, sir. But we are people of the country.
Therefore, we can freely offer advice now. I mean, I think we can... So, yes, I think the point really is there are two things that are dominant. One is we have come out of COVID. We really need to ensure that the economy grows faster. And therefore, the necessary flip to faster growth is important. And therefore, from that angle, there is one suggestion that can be made, and that is really that in the recent period, the capital expenditures of the government of India have been showing some rise, sometimes significant rise. I think it should continue.
Uh-huh.
You see, a lot of time the argument is that if the government raises the capital expenditure too much, then it will crowd out private investment. Now, as we move out of the crisis, perhaps that will not happen. it may even crowd in private investment. But this cannot be a permanent thing. I don't think this is the permanent solution. As we move further, private investment should pick up, both corporate and non-corporate, and therefore it should be done. But as we move from the present stage to the next stage, the capital expenditures should show a rise, and the revenue deficit actually should go down.
Yes.
And but the fiscal deficit I will come to, that is the most important thing. But the capital expenditures should rise. As you know, there's a golden rule in UK which said there can be no limit on fiscal deficit so long as the fiscal deficit, public borrowing, is only meant for raising capital expenditures. That means the revenue deficit should be zero.
Right.
The current expenditure should be met out of the current revenues. But if you have a capital expenditure, like any private enterprise, anybody, you can borrow and do that. But we don't have that rule. But what I'm saying is that the capital expenditure should go. That is number one. Number two is, we have now 6.4% the fiscal deficit for the current year. The fiscal deficit of the state governments is about 4%.
Right.
So 6.4 plus 4, center and states taken together is 10.4% of the GDP. 10.4% of the GDP is very high, in the sense the household savings and financial assets is only about 7%. And of course there are some savings, foreign savings which are coming in, we have to add that. Therefore, as of now, the total borrowing of the center and the states taken together is much higher than the household savings and financial assets. Therefore, we need to bring it down. But bringing down the fiscal deficit of the center, let's say from 6.4 to 3%, which was originally envisaged, would be too disruptive. Therefore, I would like the budget to show a new roadmap for taking the fiscal deficit from the current level to 3% of the GDP, and how long it will take.
Also bring revenue deficit down.
Right, yes.
Yes, sir.
And the point is that we should show the glide even in the coming, as far as the coming fiscal year is concerned. We should, in my opinion, I have not worked it out, from 6.4 to somewhere around 5.7 or something like that would be appropriate. Therefore, two things that the budget should do, in my opinion: keep the capital expenditures as a proportion of the total expenditures at a high level, keep up the trend that we have been following. Second, show a new roadmap as far as fiscal deficit is concerned and what the glide path will be.
So very wise advice. And this is my last question to you, sir.
Yeah.
Lots of students ask me, and they must have asked you, so how do I become governor of RBI? Okay. So, and you wrote in your book that you can't plan your career. So what is the advice you give to these young, intelligent, bright, aspirational students?
Well, I don't know what advice you gave to them regarding becoming governor. I think that is impossible. I think is a matter of chance. I mean, I think so many factors have to be correct in order to use. As they say, you must be the right man in the right place in order to become governor. So don't think of becoming governor. I mean, I think it may come to you, but don't think of becoming a governor. The other thing is really economics as a subject. Its ambit is becoming wider and wider. And, there was a book, Freakonomics, about which I mean, many of you might have read, and there's a more recent book by Tim Hofford, what is called The Undercover Economist,
Right.
and so on. And these are books which say how the principles of economics can be applied to a number of areas and fields and so on. Therefore, Tim's book starts with why the price of coffee in one subway in London is higher than the price of coffee, the same coffee in another subway, and so
Right.
on and so forth. So you have the knowledge of economics is widely used in various areas, and therefore the opportunities in that sense is growing in that sense. And way back, Keynes wrote in the Introduction to Cambridge Handbook series, I do not know whether you remember that, the Cambridge Handbook, Supply and Demand by Henderson, Money by D.H. Robertson and all that. That's yellow cover
Yes, sir.
jacket. And,
No, I have not seen that. Sir.
Those are the books that people used in Cambridge in those days. And Keynes, as the general editor, has a common introduction to it, where he says economics is a method rather than a doctrine, an apparatus of mind, a technique of thinking, which enables its possessor to draw correct conclusions. So basically, it is a method. It's an analytic approach, and therefore you have a wide opportunity, and the students have a wide opportunity. And therefore, I would suggest when your students, you have a good grip on analytics, that's important. And then you must have a grip on data, because it is no longer possible, it is no longer just theory. You really need to analyze data, and you must have a grip on data. And thirdly, you must be proficient in the skills that are there to use the data to prove, disprove hypotheses, or to understand the problems. So today, students of economics without a knowledge of mathematics and statistics, I am afraid to say, have no place. No, that's too strong a statement. Have a place, but I think it's, but it is better that they have a good understanding of mathematics and statistics. Because nobody wants today to simply know theory alone. And the age of big data has arrived. And if you have millions of observations, how do you do it? In fact, statisticians have now to look at how the various tools that they have evolved will change with this. But three things you should have acquired during your period: skill in analytics, skill in analyzing data, and thirdly, a grip over the techniques required for the analyzing data. That is in terms of what you need to learn. But I do believe that in the final analysis, the role of economics is really to solve problems. I mean, I think this is either as governor or as finance secretary.
Right.
I think it is finally you have to find solutions to problems. That is what Pigou wrote many, many years ago. Not knowledge for the sake of knowledge, but knowledge for the healing that knowledge may help to bring. And therefore, in the final analysis, you should really be able to apply your skills to solve the problems. So don't worry about whether you become governor or not, but do study, have a grip on these things. You may get something better than governor. So therefore you therefore, the point really is that the scope is wide, and I think that's the direction in which you should move.
Thank you, sir. Thank you for advice, counsel. I'm sure that I have lots more questions, but I've been told by the organizers that the students are very eager to ask questions, so I yield to them.
Yeah, we are not done listening to you, so we'll now listen to you through questions. But thank you so much. This was mesmerizing. I'm sure I'm speaking on behalf of all the 232 people in this audience that this was, we could have listened to you all night. But we have to end here and give a chance to others to ask questions. Thank you for taking us below the surface. This reminds me of the metaphor of if you are on a ship on the deck, it looks like smooth sailing and calm sea and nice breeze and everything is stable. And you step down into the engine room and there's frenetic activity and people running around and heat and dust and people shouting, but none of that is visible on the surface. We look at the economy on the surface and things work most of the time. But you have taken us into the engine room on how frenetic the activity was behind the scenes, which we mere mortals never get to see. But you governors were running the engine room for us so safely to give us a smooth ride through that period. So thank you so much for that. Just a couple of last announcements before we move to Q&A. After the Q&A, when we end, as you exit the auditorium, on your right side, you will see a book desk. If any of you want to buy a copy of the book, Dr. Rangarajan has kindly agreed to come to that desk and sit there for a few minutes if you want to get him to sign your copy of the book. I jumped the queue. My copy is already signed, but you can get your copy signed. Dr. Rangarajan will be there for a few minutes. With that, there are volunteers around waiting with microphones for your questions.
Hello. So first of all, thank you for
Please stand up so that we can all see you. Thank you.
Hello. So first of all, thank you for this insightful session. My name is Jay. As you said, the demonetization in 1978 happened with more legislation and lawful in terms of Supreme Court. Can you throw a light on how it was different than 2016 from political and economical standpoint?
What is the question?
So demonetization in 1978 followed a different procedure from the 2016 demonetization. In what were the economic and political implications of the difference?
You won't answer?
No, sir, I think I can't answer. I have no answer.
No, I think the point is that the magnitude of change attempted is very different. I don't exactly remember the 1977 thing, but it is far smaller in terms of the total number of currencies which were being demonetized, whereas here it is more than 70%, isn't it?
Yes, sir.
It's more than 70%.
More than 80%.
More than 80%.
Yes.
So it's a very large magnitude. Therefore, the inconvenience caused and also the problem of managing it also becomes very difficult, because if you have to reprint 80% of the currency that is in circulation, or the 80% of the value of the currency.
And in smaller denominations.
Right.
And in smaller denominations, so the volume becomes much larger.
It is, therefore, in that sense that, but if you look at it in terms of the money returned, I mean, that is the money not returned, if you look at it, both of them more or less stand on the same thing. I mean, I don't think even in the 1977 demonetization thing, the extent of money not returned was not very large.
Right.
I think it is minimal in the 2000 episode, But even in the other episode, it is not. So, in some sense, the objective was not totally fulfilled.
Sir, thank you so much for such a fabulous discussion. I am Som Sharma from PRL. Sir, I would like to say that the reforms, that nice reforms, brought us like that we can get the phone line in a day. Suppose, as you rightly told, suppose reform would have been 10 years earlier than that, in 80s, then what would have been the time scale what we are, you can say, facilitated by that reforms today?
If the reforms had happened in the 1980s instead of 91, what would have been the impact, sir?
See, 1980s, in some way the reform movement started. The major area in which it started was in the trade policy.
Rajiv Gandhi times, sir.
Yeah, Rajiv Gandhi time. And after the Alexander Committee report, an attempt was really made to remove some of the import controls and so on. But it still remained a small effort. In the Reserve Bank of India, we also tried to create a situation in which, even though when we were determining the exchange rate, I used the expression, I had mentioned it the other day also, we were trying to mimic the market.
Mimic the market, yes.
So what the market would have done, and that is what we would do. And there was one important decision that we took in 80s. That was to deregulate one part of the administrative structure of interest rate. And I know what happened as a consequence of it. We were forced to withdraw it. The government did not agree with it, and we had to actually withdraw it. So, no, to go back to your question, I think a decade earlier, if we had done, perhaps what would have happened is we would have probably gotten a higher rate of growth for a decade earlier. Please remember, that is exactly the time at which China made
Absolutely, yes.
the famous speech of Deng was made on December 13, 1978. So it is immediately after that the whole change happened, and the sharp increase happened. Please remember that the per capita income of India and China were more or less the same in 1960 and so on. It is after that the big jump happened. Therefore, it is very difficult to say that what would have happened had we introduced earlier. But it is reasonable to assume that the pickup in the growth rate would have happened a decade earlier, and therefore perhaps by this time we would have perhaps become an upper middle income country rather than the lower middle income country.
Hello sir, my name is Parth and my question comes from a lens of a first gen entrepreneur. So the question is in a two-part. First is socio-economic and second is purely economic. So an entrepreneur like me who wants to start a business wants to know why the cost of money is so high in India compared to the US, where it's somewhat around 3 to 4% and we are around 8 to 12%. Forgive my factual errors, I'm not an economist. But why is the cost of money so high? And the second thing is, like, if you see the socio-economic impact of this, you yourself were involved in the abolition of license Raj, as I understand, and the lowering of compliances. Why is starting a business seen as such a sin in our country that even now there have been strides made to increase the ease of doing business and so on, but nowhere I see lowering of the interest rate to start a new business, especially for a first-gen entrepreneur who doesn't have any capital in his hand. Thank you.
Two parties said. One was
Why is the cost of money so high?
Okay.
The real interest rates are you asking about.
and that is the second
Inflation.
one is
Why is business looked upon as an evil?
yes. Well, I think you should answer one question.
So, in front of you, I'm diffident.
You know, you answer and I will also answer.
On the cost of money, see, in fact, Mr. Chidambaram, as finance minister, used to take umbrage at me whenever I said this, which is that what matters to entrepreneurs is not the nominal interest rate, but the real interest rate. And the real interest rate is the nominal interest rate minus the inflation rate. Our inflation in India, forget the recent episode, but historically and structurally, our inflation is bound to be at least 3 to 4 percentage points higher than the inflation in advanced economies. Therefore, our interest rate should be high. What you should compare is not the nominal interest rate, but the real interest rate, which is the interest rate, nominal interest rate minus inflation. And if you do that, you'll find that it's comparable. The next question you might ask is, why is inflation high in India? Inflation is high in India because demand is much higher than supply. India is a low middle income country, and if people's incomes go up even by a small amount, that translates into consumption. You know, many people we see on the street, for example, if my income goes up by 10%, I may not spend that because I have practically everything that I want. But somebody on the street selling vegetables, if his or her income goes up by 10%, she's going to spend all that money. So inflation is high because demand is high. We are a low-income country. And because our inflation is high, our interest rates have to be high. On the second question, why business is looked on as an evil, that's historical. Unfortunately, you're having to carry the burden of a lot of history. That the stereotype view, the worldview, it's an urban legend perhaps, but the worldview is that business people make money only by cheating. That there is no legitimate way of doing business and making money, which is, you know, it's completely wrong understanding. But that's how we've grown to grow up in this country. Hopefully, entrepreneurs like you will demolish the stereotype view and prove and establish that it's possible to be honest and make money in business. So, generation of entrepreneurs from among you should attempt to do that.
See, on the interest rate, Subba explained the difference between the real and the nominal interest rate, and what really counts is the real interest rate. And many people say that why in the US this is low, so low, close to zero rate, not now, but
Earlier.
some time ago, and we have a higher rate. But it is also somewhat reflected in the exchange rate mechanism also. I mean, ultimately, you can ask, why is the dollar equal to 82 rupees or whatever it is? I mean, I think, why is it? I mean, ultimately, it all gets reflected in the exchange rate.
Yes.
So ultimately, the benefit comes through, or the cost comes through the exchange rate. So that is another aspect of it. Secondly, I think the business, I think there was a change in the attitude, and I think the essential idea of removing the permits, controls, and all that was essentially to make the business look good. I mean, I think it's not a crime to do many things. I mean, in fact, as you know, in the days when controls were there, one can be held criminally liable for violating some other rules. All that has been removed to a very large extent now. It's all a matter of, as Subba said, of showing up your merit and proving to the people that you are as essential to the economy, as essential to the society as any other set of people. And as people get convinced, I think there is a better recognition.
Yes,
I mean, I can't totally agree with you. There's a better recognition
Yes,
now
changing perception,
of
yes.
the role played by the business. Okay.
Good evening, sir. Sir, my question is, as India is facing exchange rate vulnerability, as most of foreign investors are running after dollar, as dollar enjoy the global hegemony. So, what steps India should take to establish the hegemony of the rupee?
What steps should India take to establish the hegemony of the rupee or displace the dollar?
Displace the dollar. I think you are very ambitious. I mean, there are many currencies you are trying to do, the Chinese yuan and so on and so forth. Euro attempted it at once,
Right.
at one time. It has not succeeded. No, look, a currency is strong when the economy is strong. I mean, I think that's the most important thing. Why would rupee be? I mean, for example, even today, the rupee is convertible only on current account. Rupee is not convertible fully on capital account. It is convertible only with some restrictions. So, your rupee will be regarded as an international currency only when you move away from the restrictions. That we can move to that stage only when the economy becomes strong. I mean, I think we must be able to stand on our own feet. I mean, current account deficit by itself is not a bad thing. I mean, the United States has a current account deficit has been continuing to have current account deficit for a long time, but still dollar is an international currency. But the point really is that the real question is, when will India become economically powerful and strong? I think that is the time at which your currency also will be accepted.
Power flows from the barrel of GDP, as they say. Yeah?
I think we should stop.
Hey,
I think we'll take one last question because we will need to let you go and we'll need to let our governors go. So volunteers, can you keep track of who was waiting longest? Okay, yeah.
Hey, I'm Arhan. I'm an ex-student here. So you put the appropriate timeline for the 3 breaks to be somewhere in the 80s, right? What made the 80s the right time to do this, and what were the dangers of having done this before that?
The 3 breaks that you talked about, the reforms, public sector, import restriction and all that. Same question that came up earlier, which is that why we could not do it in the 1980s, why we had to wait till 1991.
That's not what I meant. I meant, why would you so you say it was the right time to do it in the 80s, why not even earlier?
Oh, why not even earlier? Why not in the 70s?
No, it is partly political philosophy. I mean, it is not simply economics alone. I think the state has to be convinced. The political leaders have to be convinced. As I said earlier, that in the 50s and 60s, people thought that state had an important role to play, and they must take the initiative. And the incrementally, as far as investment was concerned, the major investment was from the public sector.
Yes,
Actually,
sir.
if you look at the 5-year plans there, it is the public sector which really put in the major part of the new investment that was being made. Therefore, the question is, how does the political system react to the situation? Do you think that if things have gone wrong, should we make a change, or should we really continue in the same direction, or without? For example, Pitampar Pant was a great man. I mean, was responsible for all the plans that were being written in the first 5-year plan, second 5-year plan, and all that. He was a great optimist. So if you go and tell him that, we should have grown at 5%, we have grown only at 3%, then he will say, we have to grow at 7% in order to get an average of 5%. No, that reaction essentially means that whatever you are doing is right, and therefore you should strengthen. Therefore, the question arises, you could have asked the question slightly differently and asked, why did these people in 1990 adopted this? You look at all the characters involved, I'm sorry, I shouldn't use the word character, all the people involved in the change in 1990. All of them were part of the
Pre-reform
regime.
regime, yes.
Why did they do it? And Chandrasekhar once told me that when I was Prime Minister, none of you ever told me that I have to do this. So why suddenly all of you have turned now and say that we should do this? Therefore, I myself asked the question, what was the change? What is the reason that we changed in 19? It required a crisis of this magnitude to really drive home the point that the route that we are following so far is not correct. We need to make a change. There is no other way to explain this. All of them. We take Dr. Manmohan Singh. I have written in the book, therefore I am willing to say that. The last important job that he held was the member secretary of the South-South Commission. The South-South Commission report was essentially meant to say what each country should be doing in order for it to accelerate growth. Go through the whole report. Nowhere does it say that we have to deviate from this path. It does talk about efficiency. It does talk about the need for the public sector enterprises to be efficient and so on, but did not suggest any of the things. There is, of course, one speech that Dr. Manmohan Singh made in Bangalore in between that period where he did talk about the reforms. As I told you that in 1980s, I myself did this move away from the administrative structure of interest rate, but we didn't get the support. But the point really is that some things happen, I do not know why and when, but it requires something so dramatic to happen in the system in order to make the change. I think the enormity of the problem that we faced, just look at it. I think in 1989, 1990, we were going around. I mean, I was part of the team with a begging bowl everywhere to see whether we can get money. And we sent gold for a paltry sum of $402 million. 402 is what you get one day now in India. So that was the real situation that prevailed, that made us change. Maybe the crisis had come in 1970, we would have perhaps gone back. I think that's the only answer to your question.
Thank you so much. I can see that there are many more questions, but speaking like a good salesman, if you have more questions, read the book. Just to dwell for...
I was going to add,
Oh, you're going to...
read my book and read his book.
His book as well. Both these books are here. Read these two books and you'll get most of your answers. Of course, there's nothing like listening to an answer from Dr. Rangarajan live in person, but if we can't keep him for very long, so read the book. But on the last point that Dr. Rangarajan just made, I think we keep forgetting and keep learning again and again that we should never let a good crisis go to waste. 1991 was a crisis, and under leadership of Dr. Rangarajan and others, we did not let it go waste. Pandemic was a crisis. We did not let it go waste, hopefully. The world moved on very quickly because of the crisis in terms of digitalization and in terms of our work life and so on. A lot of that was triggered by, we were forced to do it because of a crisis. So thank you so much. Dr. Subbarao traveled for a day from Hyderabad to do this for us. He didn't do it for us. He did it because he, like all of us, cannot
great
say no
regard
to
for
Dr. Rangarajan.
Yes.
We all hold Dr. Rangarajan in such high regard that he traveled all the way from Hyderabad for a day to do this for us. And of course, Dr. Rangarajan, as he said in the beginning, he has been speaking almost non-stop for the last 3 days. So as a small token of our appreciation to the two speakers, we have a small, Professor Kalro, can I request you to come up and hand over a small token of our appreciation to Dr. Rangarajan, if you can. Please, if you can come up from there. Dr. Rangarajan.
It is indeed an honor and a privilege for me to have this opportunity to pass on behalf of all of you, this token of gratitude to Dr. Rangarajan. I just want to take a couple of minutes, please sit down, to mention that when I joined IIM Ahmedabad in 1970, Dr. Rangarajan was already there, and he was our most famous, favorite professor of economics. And we used to all lovingly call him Ranga. I hope he remembers that. But as years went by, we learned to respect him more. So we don't use that term anymore. I was even more fortunate because in 1972, Dr. Rangarajan, Dr. Raghavachari, and I was the youngest, only 2 years at IIMA at that time, were given the responsibility to design the first PhD program. We used to call it the FPM program. So we three authored that report, which was implemented to start the FPM program at IIM Ahmedabad. Subsequently, we worked together. We even wrote an article on choice of technology in the sugar industry, where his expertise in economics and a little bit of fractional programming on my part resulted in this article. There are many more stories to talk about. And in fact, I had the privilege of inviting him when he was the governor of Andhra Pradesh to be the first convocation chair head at the IIM Kozhikode, where I was the director. It's been a long association, and it's something that I will always cherish. And you know, I just want to add one more thing to the marvelous introduction you gave about him. We all remember with awe that he did his PhD under Dr. Lawrence Klein, who went on to receive the Nobel Prize in Economics. So that's the kind of esteem that we have for Professor Rangarajan. I thank you all for giving me this opportunity to felicitate him. Dr. Subbarao also, whose journey I have followed quite well. And it was marvelous sitting here and listening to all that they have educated us about today. Thank you very much.
Can I call upon Professor Ramadhar Singh ji to come and give a token of appreciation to Dr. Subbarao? Yes, certainly.
I'm also honored and delighted to present the token. Now, both governors, I used to be Nepali citizen. So I purchased a house in Goel Park here. And when I applied to RBI, they said, sell within 15 days, otherwise you will auction. Luckily, Professor Rangarajan was governor, and he got it through from the government of India. In Bangalore, Dr. Subbarao was governor at that time. He also allowed. So because of the two, now I'm Indian citizen. When I joined IIM in 79, I had no idea of management or industry. So Professor V.S. Vyas said, come here for a year, do nothing, very rare these days. If you like, you can just stay, otherwise you can go back to your IIT Kanpur. So Dr. Subbarao, two of us, he had a degree from IIT Kanpur, I was a faculty there. So we have some connection. Then Professor Vyas sent me to Jaipur to attend lecture of Professor Rangarajan, and his first lecture was on Indian economy. You can imagine, 79 and now, for how many years he has been affecting our Indian economy. So to comment the two, I would like to cite something from Ramdhari Singh Dinkar. About Kern he wrote. So here are our two Kerns of India. He said, about Kern he wrote that तेजस्वी सम्मान खोजते नहीं गोत्र बतलाकर. Now I'm remembering, तेजस्वी सम्मान खोजते नहीं गोत्र बतलाकर, पाते हैं प्रशस्ति जगत में अपना कर तब दिखलाकर. So now for modern bread, now we are getting many variety of bread. हीन भाव की ओर देख जग गलत कहे या ठीक, वीर खींच कर ही रहते हैं इतिहासों में लीक. So we have two warriors of Indian economy, and my gratitude to both of you for bringing India where we stand today. Thank you very much.
Thank you. We have kept you much longer than you had bargained for, but I am sure every minute of this was worth it. So thanks a lot. One final word of thanks to the team who made this evening possible. So I'm getting into the trap of naming a few names, which by definition means that I'll miss some names. Professor Sudhir Pandey, Gopi, Nikhil, Vallabhan, Colonel Menon, Abhinav, the whole IT team, the whole campus operations team, and so on. So many people got together to get us all in this room, and most importantly, our student volunteers on both sides of this room. They made sure that we were all in the right place at the right time with the right microphones in hand. Thank you, volunteers, and thank you, everyone. And good night, and thanks for coming.